31 days of algorithmic trading results. This is for the month of May, where I run a portfolio of 10 automated strategies on the futures markets. This means on the daily operations, I'm not taking any of the entries and exits manually. It's all done through code. Now, this was probably one of the most surprising months out of the past couple of months. And I've been trading for the past 6 years, and I now run a low six figures amount of capital that is my own personal money. Let's get straight into these results. So here's my equity curve for the month. If I just slightly move my camera, I'll actually probably just make it a bit smaller so you can see everything clearer. This was, as you can see, quite a challenging month for me personally. So I was down probably about 3%, give or take, quite early in the month. Now, just to give you a bit of context about this particular graph, this is my performance over the month of May, but it's done by trade count. And I think around 282 trades, I think, were taken over that month. So you can see here are the results of all of those individual trades instead of it done by day. The main reason being here is you just get a bit more granularity of being able to see how the performance fluctuated per trade, give or take. Now, on the left-hand side, this is the returns percentage. This is based on the actual capital that I'm running. This isn't based on the notional value, like the leveraged up value on futures, because you do get a lot of leverage in futures, especially intraday, where you have lower margin requirements. So this is actually based on the pure capital, or let's say, if you want to say like margin as well, that's kind of what it's purely based on for the percentage. Now, as you can see, after that, 3% drawdown, give or take, went on an amazing run, was up about 7% in the middle of the month, then kind of stagnated, got a new like all-time high for that particular month in the midway, and then basically gave back all those returns. Now, this is why it's really important, especially for me. I try and not check returns every single day. Now, I do have risk alerts because I know when some people hear that, they think, well, how do you not know that your system isn't going wrong or something like that? I do have alerts for all those sort of things, and I can see if a trade's been taken, for example, by an alert, but I try and not look at the overall daily P&L just because I know it can definitely weigh on my psyche. And then additionally, based on one day's results, I really shouldn't be doing anything anyway to my automated strategies. I should be letting them run. I should be getting more samples. And then, after a good amount of trades and samples, maybe a quarter of trading, then I can make some logical decisions of how I want to change them. Maybe I want to stop a particular strategy, etc. Now, obviously, there's the outliers there where those risk alerts come into play. If a strategy starts losing just tons of money, or if a huge order is placed for some reason, then I'm alerted to those scenarios. But luckily, I do a lot of my automated strategies through NinjaTrader, where they handle a lot of the order management. And this is a great way where most of the time they're very robust. So I've never really run into key issues with that, especially after you've debugged your code for a bit of time. Now, after this huge, basically, drawdown of all the returns I made in the month, then we stagnated for a bit, and overall we ended the month with a 2.6 or minus 2.6, sorry, net profit. So wasn't the worst month. It definitely wasn't, like a minus 20% or anything like that. So nothing drastic. The drawdown was within what I would accept normally for a drawdown percentage. I'm normally aiming for about 10 to 15%. If it gets above 20, then I'm quite concerned, especially for a month as well. So 10% drawdown, that's totally fine within the month. And then overall results was actually minus 2.6. Now you can see here, this part is all kind of whited out. This is the reason that all of my strategies are named quite logically, just because it's easy to keep track. I've backtested probably hundreds of strategies now. So documentation for each individual strategy is really important to have a clear name for it, so you can quickly look at it and understand what strategy that is running, for example. So these are blocked out just so I don't show the names of all those particular strategies. But here you can see the net profit. So overall, we had two main big losers, and then the rest of my strategies kind of either underperformed or we only had really one that kind of made up a lot of the gains. This was actually taking 75 trades, so it was an intraday strategy, and there wasn't actually much drawdown to this, which was quite impressive. So it had a really good month overall. And this is one of those things where having more strategies means more diversification, which means, if I didn't have this one particular strategy running, this month would have been probably a minus, give or take like 7%, probably minus 6% month, which would have been pretty difficult. Now it's still within parameters, but because of having that diversification, it helps out a lot. Now, if you are wondering, why is there a $0 drawdown on this particular one? It's because there's only two trades taken. It was a swing strategy. I made about 1%, and basically both trades were a winner, so I didn't have any drawdown or anything like that. Now, to get a bit more detailed, we can see here the total amount of wins and losses for trades. What I normally focus on here to remind myself why I love automation is the max consecutive wins and the max consecutive losses. If I was trading this manually, if I had 13 losses in a row, I would probably have gone crazy and thought the strategies completely stopped working and, kind of kicking the bucket down the road, just not knowing if that strategy actually works. And then if I had 12 consecutive winners in a row, I probably would have got overconfident and started sizing more on each individual trade. So the reason why I like automation is I've never been ashamed to admit that I'm not a very good manual trader. I tried it for about a year and a half, give or take, maybe about 2 years. And then I basically went full into automation just because that's where my strengths lie. Everything else here is pretty standard. You can see the largest winner was 1.6%, largest loss was 1.23%, and then average consecutive wins and average consecutive losses. Now, to give you a bit more detail and kind of lay down how these returns were formed. Now, 29% of trades were short trades and 71% were long trades. This is quite typical for my particular portfolio. Most of the time in indices, such as ES, NQ, etc., you're going to be longing most of the time. That's where most of the returns are made. But you obviously want to be somewhat diversified and have some short strategies. Now, having good performance on the short side is probably one of the most difficult things, at least in my experience, for futures, and especially with other people I've talked to as well. If you can get it, then it's great. On Sun Month previously, I have, if you want to check out my other recaps. But this month was definitely not one of those months. So as we can see here, we had about 8% returns on longs, and we had about minus 11% on shorts, which pretty means I lost all, the returns this month because of shorting. None of the shorting strategies really worked very well. And I'm going to go a bit more into detail about this and then also explain why I don't really care too much about the reasoning as well. But just before we move on to that, let's just go over the wins, losses by weekday. I had someone leave a comment that they wanted to see this sort of graph. So here you can see the amount of wins and losses I'm taking on an average weekday split over that particular month, so about 31 days. So you can see on Sunday, obviously we have lower trading volume because Sunday the futures markets open back up. And most of the time, none of my strategies are really trading too much on Sundays. Most of them are RTH hours, but there are obviously a couple that aren't. And then we can see here Monday, Tuesday, Wednesday, Thursday, and Friday. Most of my losses, ironically, at least in May, came from Thursday and Friday. Now, one of you or a couple of you may be thinking, well, okay, why don't you turn off your strategies or, I don't know, lower the risk percentage, etc. on Thursdays and Fridays? The reason being for that, this is just 1 month's sample. So I like doing these recaps just for me to kind of keep up with performance and also to be a bit transparent, show what I'm dealing with, if I'm winning, if I'm losing, etc. But also to remind people that most of the time, unless you have an outlier event where you can easily fix a solution to it, monthly results normally don't mean too much. Now, if you're pushing crazy amount of trades, then maybe. For me, I did 282 trades this month, which is a decent sample, but it's also not enough sample on each individual strategy, if that makes sense. So this wouldn't be something where I'm thinking, hey, I need a lower exposure on Thursdays and Fridays, because there's no logical reason for it. If I could find a logical reason and had more data to back it up, then yeah, of course, I think I would probably change it. But at least for now, previously I've won tons on Thursdays and Fridays, so I don't see any kind of correlation. Now, to get a bit behind why this month was very difficult for my strategies, on first look, if you look at the NQ market, this is the NQ market over May within this box. It looks like a pretty easy long setup for the most part. You can just see overall the market is trending up higher. We do get a bit of a reversal here, but my long strategies probably should have crushed it more. That's at least what I think I assumed, and maybe other people would assume as well looking at this particular chart. Now, if we get a bit into the actual individual day price action, we can see here a lot of the time, these were gap ups, not in the sense in futures that you have really like a gap up between 5 and 6. It's more that like in pre-market hours, let's say, price was moving up higher. Obviously, you probably had a gap up in SPY, etc. And then we would get a reversal intraday. We'd either get some crazy Trump news or we'd get, whatever. It just reversed in the middle of the day. And that meant a lot of the time, my long strategies may be long. They'd be up a good amount, and then they would get absolutely ruined, whether they hit stop loss or whatever, or there's way less profit, meaning that a lot of my long strategies are like trend following strategies, where you make a lot of your returns by holding for as long as possible, trying to capture the meat of the move. And most of the time with these strong reversals like this, it's going to hit a trailing stop or something like that, and it's going to give away a lot of those returns. On the other side as well is if something gapped down, let's say, or moved down a lot, pre-market, then it would reverse intraday, and my short strategies would then get ruined on those days. So that's kind of how I'd sum it up. Obviously, I was still able to make some money long, which you could see from the earlier graphs, but a lot of my short strategies, where they were going short, it would just then reverse on them, and I'd be basically taking full losses on them. So nothing I would really say for me to adapt exactly just on this 1 month sample. It's something I want to pay attention to. If it's something that continues to happen month over month, then yes, I'll probably have to revisit some of my short strategies, maybe change them out, maybe stop them. But at least for this particular month, I'm fine. This is probably my first down month in a good while, I think at least a couple of months. I did make a small amount of side money on crypto inefficiencies, but I didn't really include it here because they weren't extremely systematic. It's still kind of me playing around with different models on crypto. So I wanted to at least just go over what I more feel confident kind of displaying and actually going over and what I'm actually putting size on. So this was a tough month. I think a couple other people had pretty tough months, at least in futures from what I've seen, but there definitely were amazing opportunities. So I know some discretionary traders that absolutely crushed me. And there's always going to be those pros and cons of systematic versus discretionary. I've had great consistency for a while, and now obviously I have a down month, but we'll see what next month brings for June.